Hi friends, welcome to my channel Simply Money. Today we will be discussing about a mutual fund that is from the mid cap category, that is the Motilal Oswal Midcap Fund. Now why are we discussing this fund is simple reason is because this fund has performed very good in the recent times, but we have to see how this particular fund has performed over the long term, and we will be discussing towards the end of this video about the rolling returns, which is very important things to see when you are comparing the returns. Now if we discuss first of all the basic facts about this particular mutual fund. See, this is from the mid cap category. If you discuss about the total asset under management, that how much money has been invested in this fund, then close to 15,900. Because of the late good performance of this particular fund, the recent AUM has increased, but like I told you, we have to evaluate it from the long term perspective. Against the benchmarks which we'll be comparing is the Nifty 150 total return index. So majority of the stocks which will be there in this particular mutual fund will be ranked from the 101 till the 250th rank, because that is the constituent of the mid cap category. Now if we come straight away to the market cap allocation, majority of the funds, because this is a mid cap fund, almost 80 to 83% allocation is there in the mid cap category. If you see from the large cap is just 13% and small cap is 2%. That means it's a total dedicated kind of a mid cap category fund. Now if we see how much the risk parameter is, we will come to that. But if we evaluate the number of stocks, and that you will see, which is one of the major difference between this particular fund and the other funds, that this fund constitute only 20 number of stocks. Yes, normally mutual funds has more number of stocks. If you see, what I have done is I have made a small comparison between the number of stocks which the different mid caps category funds have kept. So if you see, there is a stark difference between this particular fund and the other funds. Only funds which can come close to Motilal Oswal Midcap Fund is the Quant Midcap Fund. Now, like I told you, Motilal Oswal has just 20 stocks in its kitty. Herein we have Quant, which also has 23. But apart from these two, all others have majority or the more number of stocks. If you see, Kotak has almost 68 stocks, Edelweiss Midcap has almost 77, HDFC 73, Axis 101, and PGIM India again more than 75. Now why I am comparing these funds, because these are the other funds in the different AMCs which have also performed very well, and these are also very popular. Now what happens? This becomes because of the less number of stocks. This particular mid-cap fund is very concentrated, right? Normally mutual funds has more number of funds so as to diversify your risk and everything. But this is a very concentrated bet which this particular fund manager have taken in this particular thing. Now whether this particular the concentrated the profile has made our mutual fund very risky or not, we have to see. Now what we will do for that is that we have to compare it from the risk parameters. So we will be comparing the standard deviation and Sharpe ratio, because through that, these are the two very important parameters through which we can evaluate the risk parameters. Now if we straight away come to the standard deviation, whose value, if you know, has to be low. So we have compared against the benchmark, the category, and the index. Now you see the standard deviation is higher, and I also compared this particular standard deviation to other mutual funds in the same category. And what I found was that the Motilal Oswal Midcap Fund standard deviation, the value which should be lower, is higher than the category average and also against the benchmark, which is a red flag. Now if you see the Sharpe ratio, here is I am getting the comfort, because the Sharpe ratio value has to be high, which means the returns by risk. So but the standard deviation, which is very crucial, is giving me little bit of the red flags, like I told you, because its value is more than the category and the index. Now if you see the mean returns, for that we will be specially comparing the returns. But before that, let's jump on straight away to the sectors. But what is my conclusion from the risk parameters? That for me, because of the less number of stocks, there is a chances that the fund can have a high performance, which it is showing at these days. But there is a possibility that the fund can also undergo underperformance. Why? Because it is constituting very number of less stocks, and if these 4, 5 or 10 stocks perform very poor, or let's suppose the volatility comes, then this particular full underperformance will be there in this particular mutual fund. But before that, what are the number of which all the stocks are there in these 20 stocks? Before that, we will discuss what is the sector allocation. Now if you see, majority is the tech sector, almost 19 or 20%. We have consumer discretionary, capital goods, automobile, and financials. So these are the top 5 sectors. But now it's important to look in which all funds are there, which all the stocks are there. Now you'll be seeing the first stock is the Kalyan Jewelers, which you know is from the organized jewelry or a gold. The recent gold prices, the rising gold prices must have given the high to this particular stock also. Almost 10% allocation is there. Next we have the Polycab. Polycab has performed very well. Recently we have seen in the last few weeks, it has gone almost 10% almost in just 1 week. So Polycab, which is from the wire and cable, is almost 9%. We have again now we have a persistent system, very good mid cap category IT stock, almost 9%. Then we have Geo Financials, which is from the Reliance parent, it's from the 6.5%. Then we have Coforge, again a mid cap category IT company. Tube Investments, Voltas Limited, Zomato also has performed well. Balkrishna KPIT. So the kind of the quality of the stocks are very good, but like I told you, the number of stocks are quite less. Now if we talk about, because there are only 20 stocks, so let's focus on the rest or the last 10 stocks also. So we have Deepak Nitrite, we have Max Healthcare, Suzlon Energy, Aurobindo Pharma, Deepak Fertilizers, Phoenix Mills, CG Power, Dixon and Prestige Estates. So of course there is a diversification in terms of the sectors, but like I told you, there is a less number of stocks, so you have to evaluate yourself whether you are comfortable with these kind of number of stocks or not. But before that, let's also evaluate the returns profile. Now herein what we see, first we will see the point to point returns, and herein I am getting the comfort for the 1, 3 and 5 years. You can see that the stocks, the performance is quite good, or the returns are quite good. But now we will focus on the more important, that is the rolling returns. Rolling returns, if you see, compare 1 year and 3 years and 5 years against the benchmark, herein you can see that the fund has underperformed. Now what I'll also have done is, I have also done a rolling returns comparison between the BSE 150 mid cap total return index and this particular index over all the time frames, and this is again a rolling return, so you will have more data points to compare. Now you will see how the fund has performed, sometimes well and sometimes it has not. So you can see that the blue bar in this particular chart, you can see, is our fund Motilal Oswal, and the brown one is the other one, is the mid cap fund. Now you can see that there was a time around 2020 when this our fund was underperforming, but then the situation changed around January 22, and after that our Motilal Oswal has been performing well. So that is the point, it is that from the last 2 years it is performing well, but there were times when it was not performing well. So you have to see, because of the nature of this particular fund, which is making it little volatile, less number of stocks, or the concentrated bet which this particular fund manager is taking in this fund, has resulted into the period of under or in a high performance. Now what you have to do, see, if you are a long-term investor and if you are investing in a mid cap, you have to be a long-term investor of at least 5 to 7 years minimum, right? So if you are a long-term investor, then you have to stay put, because there will be a period of under and a high performance, and that is the same with all types of mutual funds, right? So if you have the conviction and you believe that the funds, even if it is 20 and the funds quality are good or the stock quality is good, then you should remain invested. I am invested in this particular mutual fund, so I want to disclose this, but there is no recommendation to invest from my point. So that is all I wanted to discuss. If you have any point or any differences, please mention that in the comment box below. Please do like the video if you have liked this video, and also do subscribe to this channel, Simply Money with Pratik. We'll see you in the next video shortly. Thank you so much for watching this video. Thanks a lot.